Hello, and my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today. And the first one I'd like to look at is the euro against the dollar. If we look at this chart, we can see a very significant key reversal up yesterday, coming as it did after a bull hammer. The significance was verification of something I had suspected and mentioned here. Though the crossover on Monday of the neckline of the January to February reverse head and shoulders continuation pattern, currently at 121.14, and the 2021 downtrend, currently 121.07, had effectively capped the market that day, ever since that Monday, the two trend lines have been diverging, and thus reducing the power they had when combined. This left them both open to attack, as the support of the flatlining medium moving average below, currently 120.55, was a far stronger proposition, as can be seen by last week's action, when it acted as resistance before becoming overcome and now acting as support. We now have overhead the old March 2018 low at 121.52, and then the April 2018 low at 122.12. So far today, consolidation over the broken downtrend and neckline, and a first attempt higher at the March 2018 low at 121.52, but so far rebuffed. The next chart I'd like to look at is cable, aka sterling against the US dollar. A fourth bullish white soldier yesterday, and a continued incremental follow-on to the recent reactionary bullish harami. Prices are now approaching a significant overhead resistance at the 139.99 level. This has rebuffed 4 earlier attempts higher since late February, and even that attempt higher back in late February was turned back around after a week, so it's important to pay close attention to it and the resistance levels beyond it, 140.75, 141.43, and the March 2018 high at 142.43. The double bottom, formed since March, has allowed this new attempt higher. Interestingly, a preliminary target X for the double bottom is at the 142.45 area, the same area as the March 2018 and February 2018 highs, whilst a full target X1 is in the 143.30 area. Overall, we're still well within the June to September 2020 bullish shift pitchfork, the lower time below currently at 137.40 and the middle time above currently at 141.99. Please remember, this pitchfork has given the bullish angle of attack of this market since September of last year. Now, one final point. The lower time continues to be partnered with the rising medium moving average, currently 137.46, which has previously been an effective barrier. So far today, a fresh attempt higher, cautiously, as seems right, given the nature of the overhead resistance. The next chart I'd like to look at is Euro Sterling. A bullish double yesterday as the market continued hesitating between the overhead resistance, currently 87.22 of the top trend line of a possible ascending triangle, and the support below of both the significant April 2020 low at 86.69 and the rising uptrend, currently 86.77, of the same ascending triangle pattern. Please remember, we are coming to a cusp in the next few days, not just for the ascending triangle, that will be by the middle of next week, but also by the chance for a monthly key reversal up. Prices close tomorrow night over 86.69, already mentioned above this level, then we will have a monthly key reversal up. If not, then we'll have a lesser outside month pattern. Additionally, and not that far, we have the spectre dropping from above, the medium moving average currently 87.60. So far today, a significant attempt lower, looking like a possible bearish engulfing pattern and attacking the uptrend that makes up the ascending triangle pattern. Just beware of false breaks. The next chart I'd like to look at is the US dollar against the Indian rupee. A second bearish black crow yesterday and also a hammer pattern as well. Now, the hammer pattern was the market reacting to the dip of the neckline, or to the neck actually, of the potential double top pattern in the 74.26 area. We have below target X for the recent ascending triangle pattern in the 73.85 area. The idea of a double top will depend on whether the 50% Fibonacci line of the February to April 2020 move at that 74.26 area holds, and how it does so. So far today, a further drop down below the 50% Fibonacci line at 74.26, thus formalizing the idea of a double top formed over April as well as the ascending triangle, and its target is in the 73.85 area. We now have an initial potential target X1 actually for the double top pattern below in the 73.45 area, and a full potential target X2 in the 73 even area. That about wraps it up. So in the meantime, good trading and stay safe in the markets and in real life.